So something obviously emerging is investing in startups, right? So do you follow startups, and what do you think of venture capital? Because that is a different ball game itself.
Yeah.
So what is your thought process on it as an investment from a risk and reward perspective?
Yeah, so I'll give you a very framework kind of thing. See, what happens is that if you are a equity investor,
Yeah,
so first is that obviously I have restrictions because I'm myself in the equity field. And like I said, when it comes to invest in equity, I would invest in whatever Whiteoak manages. So generally, I don't do personal investment. But two or three things I can tell you. One is that if I approach it from a framework perspective, then any equity investor, who's hardcore committed equity investor, will have to eventually think of investing in private equity. The reason is because private capital, alternate investments, this become very big. When we talk about equity, we talk in terms of outperforming the market, generating alpha. Now, the fact is that private capital or private equity has become so big that a lot of alpha gets captured when the company is private. And previously, companies which came to the stock market, they were very nascent in terms of their evolution. Today, you can see in India itself, companies come to the stock market when they're already 5, 10, 15 billion market cap.
Yeah.
Right. So a lot of the value has been discovered and extracted when it was a private company. I hope I'm not wrong about the numbers, but I think Uber got listed when it was about 100 billion market cap or something like that. Right. So if you are a equity enthusiast, then you have no choice but to take some interest and see how you can invest in private equity. Not everybody's cup of tea. You need the right capital, you need risk profile. But if you're purely talking in terms of maximizing your return and you're an equity enthusiast, but then you have no choice but to take some interest in it.
As an equity enthusiast, I believe it will be very hard for them to adapt to private equity, because in private equity, you're getting into it in a very early stage.
Yeah.
You're mostly backing the founding team or the company that they've built. So do you follow anything when you're investing in startups? Being from an equity perspective, you're looking at financial statements, which might not be true when you're looking at startups.
Yeah, so of course, you are backing ideas and you're backing hypotheses. To the extent there is one commonality. One commonality is that ultimately every investment you make is a hypothesis on the prospects and a hypothesis on the execution. See, out here, when you talk about private equity, the execution track record is not there, but the hypothesis you make on the prospects, or what you would say, the addressable market and the whole business idea. So some of those parallels are there. Obviously, you are coming very early, so you don't have the execution track record. That is where the founders will matter. So for example, if I have to invest, I would basically invest with some fund managers who have a good track record, and I would bank on them to actually make the investment. That's how I would do it. But I think that, everything said about risk perceptions, etc. But still, I think if you are participating in equity and you want to outperform and you want to maximize your gains, then I think, companies are going to come to public markets at a much later and later stage. So you have to at some point in time get in. In the US, I don't know if everybody is familiar, but in the US in the last 25 years, the market cap of listed equity has gone up 3x, but the number of listed companies has become half. That tells you that the number of small companies is on the wane, because more and more companies are coming into the market after they have already become mid or large cap, and good part of the small universe is still in private hands. So either it is private equity, or it is buyout funds, or it is those SPACs which became very famous. So in whichever way you look at it, in US, a lot of action has already moved to the private market. And the public market has become mainly for, large companies, efficient companies, price discovery is done. That's why they are struggling to generate alpha. Not now, but in 10, 15, 20 years, you will see those trends in India, and you will see that, private equity investing has become ubiquitous. I mean, it becomes more common.